Hey, thanks for being with me again today, you guys. I appreciate this. I'm kind of on a roll today. You know, I'm out here recording, knocking out a few different videos, and there's kind of a common theme going on because I've talked about the contrarian investor, making offers, and I'm touching on some of these points, and there's a little bit of overlap here. So this one right now, here's what I want to talk about just for a couple of minutes, you guys. It's cash flow versus interest rates, okay? Here's the discussion. So you guys, we have been in this rapid incline of interest rates, okay? So here's what I want to talk about, and I just want you thinking about this, and I want you to understand this. There's some of us who've been in the industry for a really long time, and some of the people who haven't been in the industry for so long, they love to kind of rip on us older people and say, you know, I'm tired of hearing about you guys and how you were around when interest rates were super high. And I get that, I understand. I've got adult children, I raise them, I get it. But what we can do is we can shed some light on some really key concepts for you. And that's what this is about. It's all about this idea that as interest rates now have moved up into the, let's just say at the 6 to 7% range today. Okay, now before when they were down in the 2.5 or 3 or 4% range, I mean, those are kind of what we would call ridiculously low rates, right? Artificially low. And now they're getting into what we would call a more normal market environment. Now some people go, Mark, that's crazy, you're stupid, these are high rates, this is nuts, this doesn't work. Bring me back to the low rates. It's like, that's okay, I know where you're coming from. But, and again, I'm not gonna say, well, it's a lot better than back in the days of 18% interest. I promise I won't go there with that. Here's what I want to talk about, cash flow. Cash flow, cash flow, cash flow, cash flow. So years ago, I used to buy a lot of properties, and then now I'm much more of a full-time investment broker, and I work with a lot of smart investors. But let's just go back in the day when I was buying properties, and I might have been taking out loans that were in the 8% range or 9% range. And so oftentimes I work with private money as well, private money mortgages, and it might be 9%. Now you look at that and go, well, that's just nuts, 9%. Who in the world would ever take out debt at 9%? And I go, I don't care at all. What do you mean you don't care? How can you not care about 9% rates? Because I care about the numbers working. I care about cash flow. I care about debt service coverage ratio. I care about the return on my investment. You're running the numbers to make sure the numbers work. You're underwriting to the asset. And what matters the most, hands down, period, is that they work. And how do they work? They work from cash flow. They work from making sure that we're not over leveraged on that asset. Okay, that's how they work. The cost of the money is the cost of the money, kind of like the cost of doing business, so to speak. So I don't want people getting too hung up on this idea about interest rates. And I want you more to just say, you don't need to retreat to the sidelines because rates are going up. What you need to do is say, we're in an opportunistic market. I'm going to run my numbers. I'm going to take advantage of this market. And I'm going to find myself properties that cash flow, where I can service my debt, and we've got the right kind of cash flow on top of the servicing of the debt. Simple, 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 but maybe this is going to help somebody out there right now saying, oh gee, I thought we were supposed to wait till rates went back down to 3% or 4%, and the answer is no, you don't need to do that. Prices are going to adjust, and as the prices adjust, the numbers will work for you. So you guys, something to think about. If I can help you, reach out to me on marketresultscommercial.com. Call me, text me, hit me with an email. I hope you'll subscribe to our channel. I love sharing this information with you, and I'm really glad you're with me today. So thank you so much. Guys, I love real estate. I think you do too. I think you're gonna really like our channel, Results in Real Estate. We got a ton of content. I hope you're gonna check it out. Subscribe to our YouTube channel, Results in Real Estate.